Hello and welcome to the Suzanne and Sarah YouTube channel. I'm Sarah Willis, and today we're talking about one of the most important things we talk about with our clients all the time, the balancing act of understanding the dynamics of cash flow versus appreciation in real estate investing. You want to hear about it? I do. In case you didn't know, Suzanne and I are licensed realtors here in Central Oregon, and we bring you these YouTube videos every single week on investor topics and lifestyle topics. So our hope is when you go to buy or sell in Central Oregon that you think of us and the value that we bring to you, and you give us a call to help you out. When it comes to investing in real estate, you have to choose to prioritize between cash flow or appreciation. They almost never come together, right? So they each come with their own sets of advantages, challenges, and considerations. And that is what we're going to look at in this video in particular. So investors that are focused on cash flow, which is most investors, might be surprised to hear that not all markets are going to offer this to you, okay? Especially in the interest rate market of early 2024 and late 2023. So cash flow oriented investors prioritize immediate returns through rental income. And really, this strategy involves acquiring properties in areas with strong rental demand and low price to entry. So if you can mix a low purchase price and strong rents and low expenses, then you're going to be able to generate income every month that covers your operating expenses, that covers your mortgage payments, and actually leaves room for positive cash flow. Again, where we are in Central Oregon, this is nearly impossible to find. And if you ever hear us telling you, hey, this place has cash flow, you definitely want to listen up because it's few and far between. We find them, but they are hard to find. So risk mitigation when it comes to cash flow, even if the property values fluctuate, you've still got that cash flow, which is nice. I mean, and that's the thing, multifamilies tend to not appreciate like a single family home will, but you've got several rents in place there. So if someone, if you have a unit vacant for a little while, you've got enough wiggle room to cover all of your expenses. So you have a pretty good exit strategy there, right? You have a pretty good option when there's times of economic uncertainty. So we talked about not all markets are cash flow markets. So you really have to be looking in areas with lower acquisition costs, meaning, again, lower purchase price, lower medium sales price, places that have reasonable property taxes and stable rental market. A lot of people looking for rentals instead of people looking to buy homes. So investors focus on properties that offer a high rental yield relative to the purchase price, as we already talked about. And then you can recoup your initial investment even faster. Appreciation market. Now, if you are looking for a place in Central Oregon, this is something that we can count on here. We have really steady appreciation here in Central Oregon. And while we do fluctuate with seasonality, if you look at the long-term trend here, appreciation is happening, and I don't think it's going anywhere. So appreciation focused investors, it's really the patient approach. This is a buy and hold situation. You're aiming for long-term wealth accumulation through increase in property value, not that like couple $100 a month cash flow stuff, which, it's really nice to have those cash flowing properties because there's lots of tax write-offs there, right? There's lots of opportunities to write off expenses, bonus depreciation on your properties there, but the long-term value and the long-term appreciation is really, really where you have the opportunity to build long-term wealth. But you might not be making money in the short term. That's the thing. You actually might be putting money out in the short term. So as we already talked about, this strategy involves holding onto properties for an extended period of time and capitalizing on those market trends for economic growth that really are what drive up the real estate values in the area. So in order to take advantage of the long-term trends, timing really is everything. So in a market like Central Oregon's, this is where you really want to maybe be shopping in the winter months when things are slower, when other people aren't shopping, when you really do get the best deals here in Central Oregon, or really just kind of waiting for those dips when interest rates are spiking, when other people aren't shopping. If you've got cash to spend, this is the time to get a deal. So as a long-term buy and hold appreciation investor, you really need to monitor all of those economic indicators like job growth, development trends, and all of those things will ultimately signal when it's the right time for you to buy and when property values are actually rising. So not only will this help you decide when to buy into your long-term buy and holds and your appreciation holds, it also helps you indicate in terms of when to liquidate and get out of them as well. So this approach really requires a willingness to wait for the right time to buy to maximize your returns, and then also waiting for the right time to sell as well. So appreciation investors often seek opportunities in areas like Central Oregon that are poised for growth. So it really takes some upfront research and to find where are these popular areas that we know people are moving to and not away from, that have a lot of growth in terms of industry, in terms of people wanting to live there, move there, vacation there. So these are all, again, things that you're going to want to do your research on in order to find out where are the best places to invest in long-term investments. Now, in all things, diversity is positive, right? So some people take this hybrid approach, seeking properties that offer you a combination, right? So you here in Central Oregon, this is kind of what our investors are in for, is that hybrid approach where you want to buy into a place that might not be making you a ton of money up front, or you might just really be breaking even at some months higher, some months lower. And that's where short-term rentals, for example, that's a good example of what maybe a hybrid approach could be. But this approach really allows for some immediate income while also capturing that opportunity for long-term growth and appreciation. So the type of investment for hybrid approach probably would be more like your single family homes that you can either midterm rent, like a furnished midterm professional rental, or a short-term rental. And that would be a great hybrid approach. Maybe a duplex where you can have some long-term renters in there, have one side that's midterm, one side that's long-term. But really, diversification is really what's going to hold you up when there's times of economic adversity. And it's really what's going to help you have a little bit of everything, right? So if you have got some that's cash flowing, some that's appreciating, you have multiple exit strategies, and it really helps spread out your risk and keep your portfolio resilient. Ultimately, the choice between your cash flow and appreciation really depends on you, how much money you have to put down. Again, cash flow really depends on where you're at with your down payment and the interest rate at the time. A half a point really can mean a 40,000, half of a point interest rate is what I'm trying to say, can make a difference between a maximum allowable offer of 500,000 and 550,000, right? It's a big swing that those interest rates play into it. And then also there's a big difference between cash flow when you're putting 20% down and when you're putting 50% down. So it really depends on your goals, your risk tolerance, and how much time that you have. If you are just beginning in your investment career, you probably want to really focus on some of those buy and hold strategies, the ones that are going to make you a good amount of money over time. Or if you're at the end of your real estate investing journey, you might be thinking otherwise. So stay informed on what's going on in your market or the markets that you are looking to invest in. Reach out to trusted real estate professionals in those particular areas. Suzanne and I are a great resource in Central Oregon. Let us know when you're ready to buy or sell here. Thanks for watching. Let us know if you have any questions.